Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Las Vegas Sands was the first major casino company to release their results from the second quarter of 2023, and results look pretty good. But the trends are also looking really good, specifically in Macao. So I want to dig into exactly what's going on, why this might be an opportunity that you don't want to overlook in the market. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out an event I'm doing called the Money Collaborative. There's a link to that in the show notes. I want to go, and I actually want to start with a little bit of background in what is going on in the gambling industry. There are two markets that we want to watch in gambling. One is Las Vegas, and specifically the Las Vegas Strip. The other is Macao. Now, Macao, prior to the pandemic, was about 6 times the size of the Las Vegas Strip from a gambling revenue standpoint, not nearly the moneymaker off the casino floor that Las Vegas is. But these are the two markets that we really want to keep an eye on. It's where Las Vegas Sands makes most of its money, but it also tells us a lot about what's going on in the gambling market. Now, Las Vegas Sands has sold off most of its casinos in the US, but I want to put some context to what's going on in the US and then around the world. In the last 12 months, gambling revenue up nearly 7%, but in the last 3 months, actually down slightly. Now, that was for the month of May. But if we go over to Macao, this is the data straight from Macao. They put this out every month. The growth numbers here are just crazy. Now, a year ago, there was some shutdowns in some major cities in China. They have since ended their zero COVID policy. So that's why we're starting to see a huge jump in revenue. So 500% increase in revenue in June. These numbers here are not quite back to pre-pandemic levels, need to grow about another 30, 40% to do that, but we're starting to get to pretty normal levels. And so what we expect from a company like Las Vegas Sands is that results should look pretty good. And that's exactly what we're seeing. The operating environment in Macao, this is one of the things that they highlight. Mass market gaming revenue reached 87% of Q2 2019. That's effectively just before the pandemic started. Remember, that started in China before it started in the rest of the world. Visitation has only reached 51%. So if we kind of imply the numbers there, as visitation increases, we should see that mass market gaming revenue probably exceed what we saw pre-pandemic. That would be consistent with the record levels in gambling revenue that we're seeing in Las Vegas. Not only did Las Vegas recover, it actually overshot what it was doing before the pandemic. So adjusted property EBITDA, this is a proxy for the cash flow coming from casinos. Sands China, this is their subsidiary in Macau, $541 million for the quarter. So a little over a $2 billion run rate for the year, 71% of what we saw in Q2 2019. Marina Bay Sands in Singapore, again, the recovery is actually better than what we saw before the pandemic. Adjusted property EBITDA, $432 million, a more than 1 point run rate for EBITDA or cash flow from that single casino, just phenomenal results. And the EBITDA margin was 46.7%. I don't think I've ever seen results that high in the casino industry. Here's the overall consolidated results. And remember, since then, Las Vegas Sands has sold its assets in the US, a lot of its assets in the US. So revenue nearly back to Q2 2019 levels. Adjusted EBITDA only down slightly. And net income also down slightly, about $140 million lower than it was before the pandemic. This is the final chart that I want to show. This shows how much people are spending per visit. The dotted line here is mass market win per visit. Now, for many years, about 70% of Macao's revenue has come from VIP players that come through junkets, sort of a complex system, but basically very high rollers. But a lot of the margin, especially for Las Vegas Sands, is coming from this mass market. This is kind of like regular players going to play at the casino. And you can see that the win per player is actually up pretty significantly. But the mass win overall, which is the columns here, were down really sharply during the pandemic, especially a couple of quarters here. And then last year, like I said, when there were some shutdowns in China that affected travel, the numbers are back to nearly where they were prior to the pandemic. So we're back to about 2018 levels of revenue on the mass market side of things. The overall story is that Macao is really on a quick path to recovery, but still hasn't recovered from a visitation standpoint. And that's where I think results could continue to get significantly better over the next year or two. if travel continues to open up, if people continue to spend more than they did in Macau prior to the pandemic, that could mean that this is a company that is cash flowing more money now than it was before the pandemic began. Now, you can do a couple of things with that. You can build expansion plans, which there's not a lot of places to grow either in Macau or anywhere else in the world in the gambling market right now. Or you can pay down debt or return money to shareholders. Both of those things should help the value of the stock. So I think this is becoming a great cash flow business. Again, it actually tells us that a lot of the companies that have exposure to Macau should have really great years ahead of them. Those 4 companies to look at: Las Vegas Sands, clearly the leader. Then we have Wynn Resorts, Melco Resorts, and MGM Resorts, with 2 casinos among its dozens of casinos that it has in the US. So those are the 4 companies to keep an eye on in Macau. It looks like the results are getting a lot better really rapidly. Wouldn't be surprised if they get better even over the next year. What were your thoughts? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. And thanks for watching, everybody. See you here next time.